Hello there, Davis over here, and today we're gonna be making a special video because as you guys know, yesterday we experienced a flash crash which ended up shaking the market. And if you're a DeFi investor, this means that you probably either went out of range, got close to liquidation, or worst case, got liquidated. As you guys already know, this crash happened because Bitcoin dropped from 117 to 104 in a matter of minutes. As of today, we're close to 112, so it's getting back there. But this is not really good if you're using spreadsheets or other systems to track your portfolio. So in this video, I'm gonna be showing you how you can protect yourself from being outdated, know exactly what's happening, and why we built this product. So to give you some backstory before I show you how I manage my portfolio, in situations like this, I want to make something clear. DeFi Orbit actually came from this pain point that we're experiencing today. Last year, I was managing my portfolio. I built like this monster of a spreadsheet, 24 tabs. I was so proud of it. I was like, yeah, man, I got everything that I need in here. But the issue was that it was taking me a lot of time to update it. Then I started adding my family and a close friend to the mix, and I was literally a slave to my spreadsheets. Then last year during summer, there was a pullback, the market goes down, and I'm in blindness. I don't know what's going on. I don't know how many pulls are out of range. I don't know if I'm about to get liquidated. And it was a lot of stress. So I had to jump into my laptop, open a spreadsheet, open every single position that I had open, and manually update everything. Then there was another pullback following that, and it was the exact same problem again. I had to go back to it, update absolutely everything, and not only for me, but also for my family. That's when I decided it was enough. I was going to do something about it. I signed up on every single portfolio tracker that you can think of, and nothing was solving this problem. So to solve that, we built DeFi Orbit. When November came in and the market went up, it was kind of this. It was a similar issue, but this time was positive. I was going out of range because of the elections, but I didn't know, by how much. And yeah, I decided to put up all of my energy into this. And today we have a solution that can help you. So that being said, I'm going to show you how you can use DeFi Orbit today to automate your portfolio, see where you're standing, and come up with a better strategy. So the first thing that I'm going to do, I'm going to go into wallets. I'm going to unarchive a few wallets. Full disclaimer, the wallets that I'm about to show do not belong to me. I found them online. And the reason why I'm doing this is because my intention is not to lure you into DeFi or show you how much money I'm making or not making, or share with you private information. This content should be to help you understand how you can manage your portfolio in situations like this, regardless of how much money you have. Whether it's a lot or not so much, it doesn't matter. So if you're looking for a video where I'm going to be showing you how much money I have in holdings and all this stuff, this is not it. So that being said, let's continue with unarchiving my wallets. I just wanted to make it easy for you. Don't focus on the amount, focus on what we check for. So I'm going to unarchive 3 wallets, one that has some Aave positions, another one with Uniswap, and another one with Orca. If I go on dashboard, it's going to fetch automatically, so now I have the exact amount of how much my positions are worth. The first thing that I will do is make sure that I have my active positions only, so only positions that actually have money. And now in here I can see really briefly what is my investment value and how much is worth. So we can see my P&L with this pullback is only about $10,000, or will be about $10,000, which is not bad. So the first thing that I will check is where I'm standing. So for example, in here, let's open actually this one. If I click expand details, I can see that this position is still in range. If you're still in range, then that's perfect. That means that you're still collecting fees. So when people sell their Solana for USDC in panic mode because they're about to, go out of range or about to lose their money, you're actually benefiting from that because whether they buy or sell, if you're still in range, you're still collecting fees. So as long as you don't close your position and you just let it ride and let it go back up, you're just gonna be making more fees on this type of transaction. So if you're in range, you're good. If you're out of range, don't panic either. The market just went through a flash crash, is recovering. Give it 2-3 days if you can. Just let it bounce back. Because if you are out of range, you have some impermanent losses, but the moment that the pool goes back in range, those impermanent losses because of the fees, are going to decrease. So you're going to be able to bounce back to your initial deposit plus collecting fees. If you close the position, then you might be locking some impermanent losses. So don't panic out. Don't hit your rebalancer super quick. Just let it see for about 48 hours, and then you can review from there. So if this was my position, I will be happy that I'm still in range. I won't have to worry. If you want to refresh again to see how is it going, even though we just did it a few minutes ago, you can do it and you get the real data in real time. Then in here, the next thing that I will check is my impermanent loss. It's not that relevant because this person is in range and you're good as long as you're in range. But even if you were out of range, I will look into the impermanent loss to see how much money more or less I will have to make to break even, including the fees. So if we scroll down a little bit more, we can see that this position was open with $27,000, right? And there hasn't been any withdrawn. So right now, the total invested was $29,000 and the current position value is about $25,400. $25,589 if you count fees. So all you really need is for the market to bounce back a little bit more, and then you can see that then you can at least break even and continue to make fees. So remember, even if the market is down, as long as you're in range, you're good. Just don't panic sell. If we keep scrolling down a little bit more, I would also like to know what are my assets standing. So for example, in here you can see that when this position was open, it was open with 17 Solana in total, including deposits, and $25,000. Because of the price swing, right now there is $2,000 in USDC and 124 Solana. So at the end of the day, even though the market went down, now you have more Solana than what you had before. So technically you're doing dollar cost average. So you're getting the Solana cheaper and you're also getting the fees. So that's a double win. At this point, you can decide whether you want to take some of that Solana that you bought cheaper and then, open a new range, take a loan against it, up to you. But at least now you know that you've been buying more Solana for a lower price. So if this position was mine, I will be chilling. I will be normal, okay? I don't have to do anything crazy, so we're good. Moving on, I will apply the exact same methodology to the other positions. So for example, let's go over this one. This one has two different assets. It has Solana and CVBTC. So I'll just look into the exact same formula. What's the impermanent loss? How are we looking? What's the number that I need to make, to break even? And am I in range? If you're in range, you're good. You're printing right now. So that's what I will do with my liquidity pools. Real time, updated, double check. It will take me maybe 5 minutes, no manual entries, and you're good to go. Lastly, lending and borrowing. As you already know, some of you guys take loans. So it's really important to keep an eye on your loans and how you're doing. So in here, we can see that this person has about $2.8 million, has a loan of 2.5. The APY is about 6.12, so it's changing a little bit. The only thing that I'll pay attention to will be my health factor, if this is something that you like to track, or what's your current LTV. So liquidation LTV is 80.59. Current LTV is 47.41. So if I was this person, I will actually see how much money I can still borrow against this so I can buy more assets. So for example, assets are cheap. Let's say I don't mind having a 1.5 health factor. I can come in here, adjust it to 1.5, and now I can see that I can safely borrow $341,000. That will bring me down to 1.5. So I will definitely do that and buy some Bitcoin or whatever, on discount. You can also see, for example, how much money you're paying daily, weekly, monthly on this. So now you can take some of that money and put it into a liquidity pool. And yeah, guys, that's what I'll do. I'll also watch out for liquidation. If this was my portfolio, I'll feel good about it. Not too bad. Still in range. Not getting close to getting liquidated. But if that wouldn't be the case, then the first thing that I will do is see what's my impermanent loss. From there, I can see what's my break-even number, so I don't turn my impermanent losses into permanent losses by rebalancing or withdrawing my capital. And if I'm getting close to getting liquidated, then I'll just pay off a little bit more of the loan to get it to a healthy level so we can go through this. So yeah, guys, this is how we can help you in a matter of minutes. I hope this is helpful. Once again, we build this product because I experienced this myself, and part of my team did as well. So this was built by LP providers for LP providers. So hope this helps, guys. Don't panic out. Stay strong. If you didn't want to buy because we were hitting an all-time high, then this is the opportunity for you to buy at a lower price. So once the price bounces back, you can make some fees along the way. I hope this is helpful. Let me know if you liked it, and let's keep going.